Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is an earnings special edition where we're going to be focusing on Anand Rathi Wealth's Q3 performance and the outlook going forward. First up, before we get into our conversation with the top management, let me highlight for all our viewers what the key numbers have come in from the company. The company's assets under management at the end of December has stood at 76,402 crores. That's up 38.8% on a year-on-year basis. The company has also reported a 33.3% year-on-year increase in the net profit at 77.3 crores. The revenues from operations have also jumped by nearly 30% at 237 odd crores. EBITDA has also surged by 34.3% to 107 crores and the margins have now come in at 45.2% in the reported quarter versus 43.7% in the year ago same quarter as well. What's also exciting for investors and the shareholders is that the company has decided to allot bonus shares in the ratio of 1:1. This is the first ever bonus that the company has also announced as well, and we are still awaiting the record date for the same. Let's now get into our conversation with the top management and see what is in the offing for the company going forward. I'm welcoming Mr. Rakesh Rawal, CEO of Anand Rathi Wealth, on our program today. Warm welcome to you, sir. Good to have you. Mr. Chethan Shenoy also joins in. He's the director at Anand Rathi Wealth. A warm welcome to both of you and a happy new year to both of you as well. Season's greetings. Well, the new year has actually, cheered you with great numbers also coming in. Yet again on this quarterly earnings, it was a well-rounded performance on all the parameters as well. And this has been, something that we have seen quarter on quarter. So congratulations to both of you and the entire team right there for another strong performance in this quarter too. Mr. Rawal, I will start off with you and I'll start off with the AUM number. I remember in the Q1 quarter when we had discussed, just then you had also surpassed your own guidance by nearly 96% when it comes to the AUM. And it only went on to improve by Q3 as well. What is it that you think is contributing to this aspect, especially in the quarter which is under review, October to December, when equity markets as a whole had underperformed? This aspect of yours has continued to grow with 38% surge as well. So what has been the key contributing factor here? What is the outlook now for FY25 on AUM, sir?
Yeah. So I think that the focus of the company is in getting new monies. So if you focus on getting new monies, then market will do what it will do. I can't control that. But if we focus on getting new customers and deepening the pockets of existing customers, then the AUM will have an upward trajectory, pushed by markets or pulled back by markets as the case might be. Like from a year to year basis, it's been pushed by the market. For this quarter, we've been pulled back by the market. But if we focus on what we need to do, I think we'll continue to have very, very healthy, robust growths in AUMs.
Okay, got that. Let me also welcome Mr. Shenoy right there to the conversation to help us understand what his own expectation is. Given the number that you are at on the AUM front, do you think it is the right time to really look at the revenue as well as the PAT guidance on an upward revision trajectory yet again?
Yeah, Sakshi, thank you. I think, like Sir mentioned, I think we focus on the inputs. The outputs are never in our hands. The markets will do what they have to do. This quarter has not necessarily helped us. We had to swim against the tide in this quarter because the market was down by about 8%. The good news is in a market where, in a quarter in which markets are down by about 8%, we've still had, a positive inflow of about 1 odd percent, almost 2%. So negative 8 odd percent from market, positive 2% on AUM still means in a bad quarter, we have been able to increase our AUM by about 10% of new money that has come in. So that's, I think, where AUM stands. We had projected an AUM number for the full year of about 80,000 crores. So I think that's a number that we are hoping to achieve, and hopefully the market should support us as well. Also on revenues, I think we are at 75% of the numbers that we had already revised upwards in the previous quarter, Sakshi.
Yeah.
So we're happy that we are at that 75% number on the revenues. And PAT, I think, even better at 77% of the upward revised number. So we had planned to do 295 for the entire year. We are at 227, which is about 77% of the numbers. So we are quite confident we should be able to achieve this revised upward numbers from last quarter.
Okay, got that. Mr. Rawal, I'm coming to you, especially on the mutual fund distribution and the contribution there is something that I want to focus on now. For the benefit of our viewers, I'm going to read out the numbers as well. The mutual fund distribution revenue has surged 63% year on year to 303 crores. We've also seen this has been driven by a 69% increase in the net inflows that now stands at 9,145 odd crores as well. The equity mutual fund net inflows have also seen a substantial growth. That has risen 51% on a year-on-year to over 5,831 crore rupees odd. And the share of equity mutual funds in the overall AUM has grown now to 55% right there. Break it down for us and help us understand the vision going forward from us, from here as well, on all the three aspects, on the mutual fund distribution revenue, on equity mutual fund inflows, as well as on the share of equity mutual funds in the overall AUM, sir.
So actually, the basis of this entire thing is the strategy that we have for customers, for them to get to 14 odd percent return, which comprises of in the range of 60-65% monies into equity funds and 30-35% in structures. Yeah. So that's the core around which the entire business is built, right? And therefore, when we get fresh AUMs, it sort of moves in these two categories of products, and therefore it has a natural growth that is seen so far. So I think that if I get a net mobilization of 1,000 crores, it has a potential to go to mutual funds in the range of 600-700 crores. So that, including market growth, will continue to power our mutual fund revenues. Our own internal belief is that over a period of time, uh, we should have revenue split between structures and mutual funds in the range of the 50-50. Yeah.
Okay, okay.
So therefore, mutual fund revenues, which are trail driven, will be, will keep flowing, plus minus some market impact. And our structure revenues uh, are also fairly stable because most clients on maturity will reinvest them into structures. But be that as it may, there is an upfront element to it that the risk of that upfront element will keep reducing. So that's the larger vision that we have to get there in a few years.
Follow up, Mr. Rawal, I also had this question on your structured products as well. I believe the initial guidance that the company had given on its overall contribution to the revenue to rise to about 33% odd. Has it already achieved that? And what exactly is the status right now? By when do you think that will be achieved?
No, if I understand you right, that the guidance for the revenue of structures to the total, is that what
Yes,
you?
yes, yes.
No, so therefore that our vision is for structures to be 50% and mutual funds to be 50. We're not there as yet. We are
Okay,
more in the range of about 35-40 for
okay,
mutual funds, but we want this to go to 50-50 over the years. Yeah.
okay, okay. Got that.
All the acquisitions or the net flows are helping us do that.
Understood. Let me just get Mr. Shenoy also. The other aspect is on your relationship managers as well. The way you have been continuously focusing on increasing. I believe you had already planned to increase that every quarter and every year substantially by 40-50 odd. Currently the number stands at about 383 and you've added about 61 RMs right there. Help us understand what is your outlook here? Will you continue to look at an increase, with the same amount, or do you see, that measure also increasing? And two, what will this really lead to in terms of the employees' expenses? Do you see that also continuously inching up for you?
So Sakshi, I think number one, to answer your question, we are quite happy with the rate at which we have been able to increase our headcount in terms of RMs. It's a very strong family culture which is in the roots of our business. So our RM attrition has been, until for 5 quarters continuously, has been zero. And this quarter, unfortunately, we lost one RM who was more than 40 crores of AUM. So with that, we are at about 383 RMs, which is about 61 added, like you rightly mentioned. The good news is about 64% of the 61 RMs that we've added come from internal promotions. So our AMs, account managers who support our RMs, which is about army of about 400, are getting trained by the existing RMs to become RMs in the future. Usually the training goes on for anywhere between 3 to 4 years, and at the right time we promote them to become RMs. So the problem is not about from where will we get RMs. The planning is when it's the right time for them to get promoted, we promote them, because a good 60-65% of our future RMs will, maybe up to 70% will happen from our existing set of people who are already working with us and are getting trained to become RMs of the future. So that's why we're quite confident that the growth in RMs is more of something that we need to plan and promote internally.
Okay. Mr. Rawal, now let's come to the private wealth segment, which again is growing strong for you. 19% of a year-on-year increase in the active client families, now reaching 11,426. What's the outlook here, especially when it comes to newer additions coming from the tier 2 and tier 3 places, sir?
Actually, there is, infinite, so to say, potential in our main cities, and there is also large potential in tier two cities. It's a question of how much of it can you, what kind of resourcing you can build to sort of capture that. And we are the 61 odd numbers are a direction which tells us that if we keep building capacity, we'll keep building business. But yes, I think that if I want to say to myself that, hey, am I a brand that is well entrenched in this beautiful country, India, and have concentration on just the 4 cities, doesn't give me happiness. And therefore, we would want to go to tier two cities, which we are doing, but it's not out of majburi कि वहां पे business नहीं मिला यहाँ जा रहे हैं. It is out of desire to go along and help people in various parts of our lovely country.
Okay. Mr. Shenoy, I'll get you in on the subsidiaries performance as well now. For your digital wealth business, we've seen the total revenue, it's grown by about 18% on a year-on-year basis to 22 odd crores. And for your Omni Financial Services, another subsidiary, that's grown about 15% on a year-on-year basis. Now with the revenue growth, which has come into 5.7 odd crore rupees as well. And its technology platform subscriber base has also grown this time around. Do tell us, what is the vision for both of these subsidiaries going forward? Are they growing in sync with your own expectations right now? And where do you see further levers?
So these two businesses are more of learning phase as far as we are concerned, and we're quite happy. In a learning phase, if a business is growing at the rate of 18-20%, AUMs are growing, they're self-sustaining, and they're profitable. We are quite happy about this. We do not, at this point in time, plan to have these businesses being talked about too much, because we're still in the learning phase. The PWM business, the private wealth management business, is the core business. But we're very happy with the guidance that was given for this business and the numbers that we've achieved on both digital wealth management as well as Omni OFA business, which is the Omni Financial Advisory business.
Okay. Now, broader questions to you, Mr. Rawal. One, on the kind of scenario that we are seeing right now as far as the equity markets are concerned and the investor strategies are concerned. We've been seeing 4th month in a running where consolidation is playing up, a lot of days of sharp corrections, especially in the broader markets that we are seeing as well. This is unnerving a lot of investors who are seeing this kind of a long 4 4.5 months of continued consolidation for the first time. This is happening, and the markets are already down 10, 12 odd percent from their September highs. Help us understand what is your own outlook on the markets right now. We are heading into, Donald Trump's regime coming in from 20th of Jan. There is again lesser expectation from the US Fed as far as the rate cut are concerned. That was earlier being seen as one of the key big triggers that could have been positive for the markets. There is lesser expectation on that front, and of course we have the budget now coming in. How are you looking at navigating through all of these right now to help us understand what is the outlook for you, sir?
So basically, short-term movements of markets are determined by the short-term events and uncertainties around Trump coming in or the budget coming in and so on and so forth. But if you really look at it from our own Indian perspective, there is a overall commitment of the country to grow it at 7.5%. Yeah, which is, I think, the country's commitment, not just the responsibility of the finance minister. It's our commitment as well. And I think that we in aspirational India can get to that growth, and we will. Now, if you get to that growth, the profits will sooner or later catch up. And if they do catch up, the markets will rebound. So my own feeling on this is that it's more short term. And we in Anand Rathi Wealth manage money for the long term. And our investors, by and large, are not frazzled by what's happening. Yeah. And therefore, if you really look at it this quarter, where the markets dropped 9%, we continued to show a growth of 30 odd percent. So long-term investing, I think, is completely intact as far as India is concerned. We will navigate this as we go along. Good things happen, and they will happen again, and the sentiment will change. Budget is one trigger. Let's see what Nirmala ji does. There will be other triggers as we go along. For example, there could be potential triggers of Indian rate cut that will happen sooner or later. Once Trump comes in, it will be more clear as to what direction he wants to choose. So I think with time, things will be reversed, and it will not be something that you'll wait for a long time. I think it will be more short term than long term. And we shouldn't get carried away by the negative sentiment.
Okay, that's a positive outlook and an optimistic one at that. Mr. Rawal, you did point out about the budget being the next key trigger for the markets too. Is there any big ask that you or as the industry would have right now?
Well, I think that something that's already in the cards, which is simplification of the tax code, I think is a big ticket item, which is awaiting. The country is awaiting that, and I think simplification, which is our tagline, is uncomplicated, and I think that uncomplicated has delivered great results for us, and I think simplification can deliver great results for our country. And my request would be that, hey, you want to tax, in a straightforward manner rather than creating all kinds of complicated situations which confuse you, and of course help the chartered accountant fraternity, which I have nothing against, but why can't I make it so simple that I can fill it up myself?
Okay, got that. Simplification and being uncomplicated as far as the taxation is concerned is the big ask right there. Mr. Rawal, Mr. Shenoy, it's been a pleasure speaking to both of you. I wish you both all the very best for the upcoming quarter as well, and hope to see you soon around the corner when the budget is around, and we'll hear more from you on as far as the budget decisions are concerned. Thank you so much for being with us.
Thank you for having us, Sakshi, and we've also done a bonus of 1:1.
Oh yes, how could I forget that? Of course, that's a big one. I did mention it in the headlines, but are we going to hear the record date soon from you?
Well, that is a process in it, and I'm sure the process will take place, and we'll do it as soon as we can. But that's in line with our making sure that all the stakeholders, which is shareholders, our clients, as well as our employees, The focus of the company is on all three of them equally. Yeah. And we will keep on doing our best for all the three stakeholders.
Thank you so much and many congratulations yet again for announcing that bonus as well as another quarterly earnings of strong performance right there, even in this weak sentiment that we are looking at. Many thanks for being with us, sir.
Thank you, Sakshi. Thank you for having us. God bless you.
Thank you so much. With that, viewers, we wrap up this very special conversation with Anand Rathi Wealth on the earnings and the expectations right there. Do stay with us on Business Today. There'll be a lot of earnings conversations, IPO conversations, and market chat that we will have continued to do throughout the course of the day. So there's a lot more lined up for you. Don't go anywhere. This is your place to be to understand everything that you need to know about markets and business.
मोदी जी ने इतने शानदार फ्लैट दिल्ली के झुग्गी के लोगों को बना के दिए हैं।